if I look here, can you see they give me a lot of balances? Can you see they give me here opening balances 1st of April? And can you see this for direct material, work in progress, finished goods? It's my 3 stock accounts. And then, can you see there's a consumable stores on hand? This is necessary for me to calculate the consumable stores that will go to the factory overheads. Okay, now, let's see. Opening balances, 1st of April, so I go right in. Raw material, April 1st, 20,000. Work in process, April 1st, 40,000. Finished goods, 120,000. For the consumable stores on hand, I'm somehow going to do a rough T. So I'm going to take this off. I'm going to do a rough T for consumable stores, the expense. So what I say is I will open up with that 5,000. This consumable stores will have an opening, whatever we buy, and a closing. And this would be what I used, that I close off on. You remember it was true even before with your other adjustments. This is the Handy Andy I didn't use last year. This is the Handy Andy I bought this year. This is the Handy Andy I have left, meaning the difference is the Handy Andy that I used. Same principle. Okay, so can you see in the consumable stores that 5,000 is the consumable stores on hand opening balance. Because what happens with this? Let me just show you. Thank you. So I'm just quickly going to go through the story again. So, year 1, I had 7,000 Handy Andys. I count the end of the year that 1,000 wasn't used, which means 6,000 was used, meaning that is my expense for consumable stores, and the 1,000 is going to go to the balance sheet. But to do that, I need to make that 1,000 an asset. The asset is called consumable stores on hand. Next year, that 1,000 bottles of Handy Andy is going to be used. So now I take it out of being an asset, put it into being an expense again. So I've got 1,000 bottles of Handy Andy to use. I buy extra 9,000. So now I've got 10,000 bottles. End of the year, I do a stock take. I see, oh, I didn't use 1,500. Can you see, this is my unused. Meaning, I used 8,500. The 8,500 will be my expense. The 1,500, I'm going to make a asset again. So can you see, it's literally an asset for one day, so that I can set up my balance sheet. The next day, I take it back to expenses, because now I'm going to use it again. Are you guys sharp with this? Sharp. So now, when I go to this, let's go back to today. So now what they're going to do in the manufacturing exercise is they're going to give me the stock. You can see all of this here is stock balances. Okay? So what kind of stock do I have? I have ingredients, stuff that is busy being made, half made, stuff that's done, ready to sell. And then they put consumable stores on hand there also, because that's also stock. So can you see, the total of this would be my inventory if I asked you to set up a balance sheet. Does that make sense to you? This is my inventory. Must I repeat that? So in other words, if I would, and they don't, but if I were to ask you the face of the balance sheet, where it says current assets, inventory, receivables, cash. The inventory would be this, all the stock together. Now you don't just have trading stock. You've got different kinds of stock. Your trading stock in the end is that finished goods. That's the stock you're going to sell. But you are not just a trader. You are a producer. So meaning you've got different phases of the stock. It's got the phase where it's still just an ingredient. Then it's got the phase where it's busy in process. And then you've got the phase where it's done, ready to sell. And consumable stores on hand. Okay. Now, that consumable stores on hand, in other words, what are they saying to you? This is the consumable stores left from last year. And that is why I say, oh, you don't have to do the consumables on hand, because you must know the consumables that were left over from last year is now what I'm going to start with this year. So it's like an opening balance for me. Okay, because I'm not going to ask you the formal T account. I'm just going to ask you, what was the consumable stores that you used? And how will you know what is the consumable stores that were used? You take the opening, which is the unused from last year. Whatever you buy, you subtract what you count the end of this year that wasn't used. And that's how you calculate what was used. Can I ask you, if I say to you, there were consumable stores returned that was not on standard, or the bottles leaked or whatever, so we returned it, where would I put it in consumable stores? If I return consumable stores to my supplier, what side of consumable stores would that be? On the minus side, it would go credit. So you can have this side returns. Can you guys see? You guys must know how to use T's. So if I say for instance, in an adjustment, consumable stores were stolen. So the cleaning lady took two bottles of Handy Andy. So where will you put it in consumable stores? How would you treat that? You would put it in the minus. And how do you treat stolen stuff? You create a T account called stock stolen or consumable stolen. And that would be a loss. It's an expense. You get what I'm saying? Okay? And if you had insurance on it, your expense becomes less. Your loss is less, because you're going to get some of it back. But consumables, do you insure consumables? No. So then the whole thing would be a loss. Okay. So let's not go in there. I just want you to see how T's work. You have to start being flexible with your T's. Okay. So I already have 5,000 Rand consumables. That's what I see. Okay. So now I did put in all the balances. Now they tell me transactions for the year ended. Can you see? It's the whole financial year. So first, consumable stores bought for cash, 15,000. So I already bought 15,000. So how many bottles of Handy Andy do I have now? 20,000 Rands worth. Okay. Raw materials purchased on credit. So which T am I going to use? Raw material. Is it going to be next to bank or creditors? Creditors. And it is 70,000. Yes. Yeah. Except factory overhead is an expense. This is an asset, because they are all stock. So they are all plus minus. Okay. So, next one. So we've done those two. Carriage on raw material paid. What did I say yesterday? I said anything. We call it loading of the cost. Meaning the cost becomes more. Let's say you buy a bed for 10,000 rand. Now the bed needs to come to your house. It costs you 500 rand to have it delivered. How much did the bed cost you? 10,000 or 10,500? Can you see your purchase price was loaded with the carriage price? Okay? So carriage and import duties loads the price. So now they say carriage on raw material 6.5. So can you see we paid it, so I'm going to put it there. Am I going to say carriage on raw material? No. Because the details here will tell me if I paid it or if I still owe it. Bank or creditors. What's the only other account that we can put there? There's three ways we can acquire things. Cash, bank, credit, creditors control. What's the third one? Petty cash. So that's the only three ways you acquire stuff. Bank, creditors, petty cash. So you are not going to write there for me carriage, because then I'm going to slap you. Okay. So what would have happened if they said they also did it on credit? Then I would say this is 76,500. Okay. Next one. Raw materials issued. So what did I say? That just means, that issued just means that the storeroom send it to the work in progress. Okay. So the storeroom has got a door and they lock it. The work in progress is the factory floor. It's where they are producing. Okay. So it's going to work like this. How much is issued? 82,000. So that 82,000 is going to go to work in process. Here. Because now I'm going to use it to make whatever my product is. Okay. You guys with me? Next one. Factory wages paid. Okay? Factory wages paid. Now, just be careful. This is my direct, but there's adjustments. And I can see there they talk about wages. So I'm just going to go, and here with direct labor, I'm going to write the amount there. But I'm going to see, because there's definitely going to be an adjustment in this case. Okay. So this is my direct. If they say factory wage, okay. Sometimes they will say factory wages, or wages and salaries, and then they will specify for factory workers, factory foremen, cleaners. Then the factory workers would be the direct. The foremen and cleaners would be factory overheads, indirect. You guys got it. It's still new, and later on it's going to be like second nature for you. Okay. Factory electricity paid. So I just want to see there's no adjustment for electricity. So all of that is going to go to my factory overheads. So it's electricity, yeah. Electricity 3,000. It's an expense. Factory overhead is factory expenses. Can't put any assets in there.
So you don't have an opening balance?
No opening balances? Okay. Next one. Maintenance on factory equipment. That's an expense. And they say factory equipment. So it's factory overheads. Maintenance is 8,000. Now they say here, medical aid contribution for factory workers. Now I'm asking you, when we do the income statement and it's salary and wages, do you remember that your expense for salary and wages is always the gross and the contribution, isn't it? So now we did show the gross, but now we need to show the contribution, and still for the factory workers. You see? Next one. Factory rent. Oh, definitely that's a factory overhead. Rent. Expense. 24. Can you see, this thing is basically just knowing where to put it. Oh, that sounds like accounting. Here we go. Depreciation on factory equipment. So, depreciation on factory equipment. Can you see? Anything difficult so far? The most complicated was that consumable stores that we did. Okay? So now I get to my adjustments. And the first adjustment is they give me closing balances. So let's go put in the closing balances. So can you see raw material is a question mark? Meaning we already have everything. Nothing was returned, so I'm just going to balance. How do I balance? 20 plus 6 plus 70 less 82. Gives me something 500. It's 96 less 82. Is it 14,500? Is that what you get? Okay. Work in progress. Can you see they give me a closing balance? 41. So that's the stock they counted. Meaning the end of the financial year, 41,000 stock is still in progress. It's not done. So I've got a closing balance. 41, meaning next year's opening. Okay? Then they give me finished goods stock. Meaning this is stuff that didn't sell. Everybody with me? Everybody happy? Okay? Let's just quickly look again. Can you see they give me closing balances? The end of the financial year. Right? 4. Work in process and finished goods. That's where I get the 41 next year. So this is March 31st. March 31st. You see? And the same with the finished goods. Can you see my dates? It's the full year. We've done the full year now. Happy? Can I continue? Yes? Okay, so the sales isn't in yet because we are still busy with the cost. There's no account here where I need to show sales. Sales will be shown in the trading account, and we haven't done the trading account. The whole purpose of all of these T's is in the end, I want to get my cost of sales. Okay? And most probably I'm going to use sales to do that. How will I do that? If they gave me a markup, then I say sales times 100 over 100 plus the markup, then I can get the cost of sales. Okay? So, the other one they give me is the consumable stores on hand. Now remember now, can you see this is now the closing? This is now the end of the year. I counted. I didn't use 6,000. So how much did I use? So you say 5 plus 15 less 6 gives me 14. Okay, so in my factory overheads, I'm going to say consumable stores, don't say on hand, just consumable stores, 14,000. And I'm going to ask you to please always show me your calculation. The opening plus what I bought less what I didn't use. Because this is going to be 1, 2, 3, 4 marks. Okay, I repeat it again. It's the opening, what I have left from last year. So it's the balance they give me for consumable stores on hand. Then what I bought, less what I have as a balance for consumables on hand the end of the year, because that's my closing balance. That's the balance that I didn't use. Will give me what I used. Okay, so I've done all of that. Next one is the wages. They say wages for March has not yet been posted. Remember, we're working with expenses. So what do I want? The gross and the contribution. So they say gross was so much, contribution so much. Okay, so when I go here to my direct labor, I need to add March, the gross of 6,600 and the contribution of 1,200. Okay, so there's my direct labor, the gross and the contribution. And how much is that? What is it? 79, 82, 88, 86, 800. Okay. And now we are done. Now we just need to fill in the gaps. So, if I look, raw material is done. Ne? We're done with raw material. Work in progress. We short factory overheads and we short finished goods. If I go to finished goods, I still short two things. So that's not going to help me. If I go to factory overheads, I already have all my factory overheads. So I just need to add them and take them to work in progress. Okay? So this total will go to work in progress.
And why?
Because this is the expenses in the production. This is the expenses that's allocated to the production cost. Remember, in your work in progress, you calculate your production cost. Okay? So, if I add all of this, it gives me what? 51. 51, 400. Where do you see 400? Can't be 51, 4,000. 64,000. Thank you. 64,000. And that 64 goes there. So now I've got my cost. Remember, your cost is direct material, direct labor, factory overheads. That's the cost of making the good. Okay? The balances is just the goods that's not done. The cake that's still in the oven. Okay? Now, can I calculate what is done? Is there a way for me? Yes. And how is that? I balance. Because I literally short one thing. So I'm going to add debit side minus credit side. How much is that? How much? Two? 272?
Yes, 231,800.
Okay, 231,800. Okay, so that I take to finished goods because now they're ready to sell. I can go sell it. And now, if I look and see how it makes sense. This is what didn't sell last year. This is now the new products I just finished making. This is the stuff left over the end of the year that didn't sell. You see the difference is going to tell me the stock that did sell. And how much is that? So I say 120 plus 231 less 51. And it gives me 310,800. And there's my cost of